Investors keying in on Q4 revenue guidance that came in a bit light of analyst estimates. Shares are down about 15%. Joining us in an exclusive interview before the analyst call is Ibotta CEO Bryan Leach. Bryan, it's great to have you on. Welcome.
Thanks for having me, Morgan. It's a pleasure.
So that is exactly where I want to start with you, and that is the guidance, which came in shy of expectations. Why and how does it speak to what you're seeing within the business, but also what you're seeing in terms of the consumer?
Yeah, look, first of all, we had fantastic performance in the third quarter. We beat substantially on both the top and the bottom line. We were really pleased with the reacceleration of our business in the second half of the third quarter. And in fact, I think that's related to our outlook for the fourth quarter in the sense that what we're hearing from our consumer packaged goods clients is just that they need time to reallocate more dollars to invest in our network. We've grown 62% year over year in terms of the investment amount the CPG community has put into our platform. We've exceeded expectations in terms of what we had planned for in terms of redeemer growth. It's now more than 15 million redeemers on our platform. That's up over 60% year over year. And so we kind of outkicked our coverage a little bit in terms of the available supply of offers. We have just a ravenous demand for our product. Consumers want to save money in this environment, which is stubborn inflation and rising costs of groceries. And so as people are gobbling up all of the offers that we have as fast as we're putting them on our network, we're looking forward to the resetting and rolling over of the annual budgets at our clients. And we think that you'll see a substantial reacceleration of our business in the coming year.
That's really interesting. It sounds like if you're going to have a challenge, it's probably a good one to have. So in light of that, and analysts have talked about the fact that Ibotta is arguably one of the few companies out there, internet companies out there, that is a beneficiary of persistent inflation. We did get CPI earlier today, came in line with expectations, but it speaks to how sticky it still is. We just heard from David Einhorn at Delivering Alpha, who says he thinks an incoming Trump administration could mean inflation sort of reaccelerating again here. What are you anticipating, and what does that mean in terms of that future business for Ibotta?
It's certainly possible. There are contemplated tariffs and things that may increase the cost of consumer goods. We know that no matter what the environment, people are always looking to save money on non-discretionary purchase items, things they have to buy every single week. And that's what we do. That's our bread and butter. We have seen a doubling of our business outside of grocery, so what we call our general merchandise business. Those might be harder hit by some of the tariffs. I could imagine that. That would mean all the more reason why people would be looking for savings opportunities all across our network. Recall that, this is not Groupon, right? We run a network. We power Walmart's loyalty program. We power Dollar General's loyalty program. We just announced Instacart will be coming online later this year. So we're a much more diversified network of places where people can find our savings. And we think that in all those different contexts, saving money will continue to be super relevant under the Trump administration.
And of course, you do work with Walmart. Walmart has also been a stakeholder in your company. How much more room is there to run in terms of that partnership?
Well, we're just in the early innings still. I mean, we are very, very underpenetrated there. The issue is not, is there room to grow at Walmart? We just need more supply of offers. I mean, we are the single most efficient way for a consumer packaged goods company to drive an incremental sale. We're one of the only ways you can measure whether or not you've actually delivered an incremental sale in near real time. That's really extraordinary. And as that message gets out there, what you're going to see is, even with our existing Walmart audience, a real increase in the usage rates just as people take up those offers. I also think we have many multiples of growth, turns of growth left at places like Walmart. Plus, we're really optimistic about bringing on new publishers like Instacart next year, and hopefully others that we'll announce in the future. So we're bullish on the continued demand side of our business. Our focus is really on matching that ravenous demand with adequate offer supply.
You just mentioned Instacart next year. What does integration and scaling of that partnership entail?
Well, we're already in the testing phase, in the pilot phase. We've gone quite a distance, in terms of signing, announcing, and piloting that. We expect that by the end of this year, that will be live. That's $30 billion of additional purchasing power. It's roughly 2/3 the size of Walmart in terms of the online grocery business. This is an upgrade to the capabilities that brands have and how they promote their products. So we believe it could be a really material contribution to our business in the coming years. It takes time to ramp. There are capabilities that ramp over time. In the first roughly 180 days of the year, we think those will fully ramp. We're excited about launching things like beer, wine, and spirits offers, which are currently a smaller part of our business, but which can become a bigger part. So we're certainly optimistic about what 25 holds for us, with our existing publishers continuing to expand their programs, keeping in mind 62% year-over-year growth. Just this last year, we see a lot more growth in our current publishers, and then adding in companies like Instacart will certainly be a tailwind.
Okay. Bryan Leach of Ibotta, thank you so much for joining me.
Thank you, Morgan. Have a great day.
You too.